Let's jump forward here for context. We're at near high of day on an island, no man's land, in a thin spot of the profile. The value area of the day is presumably below us. It's very thin up here. Sorry if you hear me cracking my arm. It's sore. It's irrelevant. Okay, we have a distribution from 24.25 to 25.50. It hit 25.50 and sold off the tail end of the distribution. There's a shelling point at 24, and I'm watching the tape here to see what to do. There's 40 absorbed, sell side at 24. 24.25. I place a bid after two ticks, move up back into the distribution. I'm looking for center distribution. I'm looking for mean reversion here off the 40 absorbed. 24 even, we immediately, the 40 absorbed at 24 even, we immediately sell off on low ticks and the auction becomes normative. 23.75, there's an ask there at 4. uh, right, so we went from upticking from 25 to 75 down to 24 even now, and value is building. So I asked myself in the middle of this trade, what would I do, and what am I looking for to get out? Simply put, the bid ask sitting below my entry with normative participation on both sides is enough to scratch the trade. The initial reason for entry was an order flow imbalance, which appears to have been neutralized. So I get out for a one tick loss. They let me scratch, and that was the right decision to make. A couple ticks lower, it moves. A couple seconds lower, it moves two, three ticks and forms a new normative auction. Normative meaning the flow is two-sided here, and there isn't much from the distribution to trade off of. 23 is the end of an LVN and the buildup of an HVN. The profile thickens out for three ticks from 22.50, 22.25 to 23 even. And 23.25 to 24 even is an LVN low volume node. And that's what we shot below. That was the trade I went against. Yeah, that was the trade I went against. I was looking for a version up at 24 and it broke down, and I rightfully got out as order flow normalized and value shifted lower, indicating that they wanted lower prices. And the edge decayed. I flip short here at 23.25 after a liquidity event. A bunch of buyers explode 23.25 and into the LVN, and price sits. And so typically when that happens, inventory is emptied and it moves in the opposite direction at the expense of the buyers who got out. Inventory empties and there's an imbalance there. So I flip short there. There's 136, 23.25 on the bid, 116 on the ask. So that also means the auction is shifting lower here. 23 even. I'm looking for a couple tick rally, maybe three ticks off of the LE towards 2225 or 2250, which is the thick part of the HVN that I was initially talking about. I got in predominantly because of the liquidity event that I'm looking to get out and I'm looking to get out for after a short-term price movement, irrespective of flow or irrespective of auction behavior. So price rallies lower on aggressive selling at 29 at 75, 45 at 50, and the 13 at 25. and the Q on the buy side is thin. And the auction continues lower. It's still normative, normal, right? And then we hit 2150, which is still the low volume node, and price rallies. The Q pulls and it moves up on low volume. So I scratched it a bit early, but realistically, I would have held it to a maximum of 22, and the reversal of price in which the Q pulls just looks like time-based momentum slowing down, and then some decent absorption, and then an immediate pullback back to 22.25. So realistically, getting out at 22.50 wasn't a bad idea. I caught the initial plunge and didn't have to wait for any further rotation. I think it's improper to see a six tick liquidity event and expect the six tick move in the opposite direction. That was a good short. Now I'm sitting on my hands, which is another trade in itself, because the profile is scuffed, and I'm not really interested in trading it. The thicker parts of the profile, because there's no edge there, or there's less of an edge. And it should be noted that off 2250 up to 2550, which is the full distribution prices, exploded. There are spots on the sell queue where there aren't traders, 24.75 and 24 even, nobody hit the inside prints, but the rest of the auction is equal. There's just a flow imbalance from a market maker perspective, most likely, that's allowing, that's giving buyers sort of a carte blanche, so they're pricing higher. Market makers are pricing higher, and now uh, 25, 25, 80 on the ask, 68, 25, 50. Right, so we see at the value area high, Schelling point, there's an influx of liquidity on both sides. A seller got absorbed big time, 28, 25, and then price, there was another liquidity event. I'm just going to call them LEs. There's another LE, LE, yeah. There's another LE at starting at 25, 25 into the LVN outside of the island, the HVN. 26 from 25, 25 to 26, 75. The bid tape exploded. So what I'm looking for now is that same reversion trade, but there's also a 1000 lot 36. I heard somebody in Discord say this morning that this lot was real and it was hit, so that's kind of an edge I had, and I was thinking about that, but realistically, uh, the order had been sitting there for a long time, and that meant it was real, and we're three ticks away, and it didn't pull, so that was an indicator it was a real trade. So what I'm looking for now is price to shift lower at the expense of the buyers on this LE who were forced out of the market, because that's typically what happens. And if that doesn't happen, then the market is bullish in the face of people blowing out, which is interesting. So I have and that there's this big lot I'm talking about is a 1000 lot sell side at 27 even. Price is at 26 now. End of a Schelling point, value area high, not even, further just into the thin part of the distribution, 2, 3 ticks off of any sort of sizable node on the smaller island that we were just trading in. 26 even is the price. 108 was absorbed sell side without price moving. I given the given the LE and the fact that 108 hit and price didn't move lower, irrespective of the bid ask taking up or down, I smash a bid here at 26 even. Because of the heavy absorption, 108 on the ask at 26 even. There's 69 traded on the bid, the LE, previous LE, and the 1000 lot that we are 4 ticks away from at 27 even. that didn't move. This is setting up the reason, the reason, but the reason. So there are three, four reasons for this trade. It's probably the best trade I've ever put on. One, Schelling point. We're outside of the HVN. Two, heavy seller absorption. Uh, Yeah. Three, LE, liquidity event, and the fact that price didn't move lower after, which it typically does. And four, the 1,000 lot at 27, which is believably real because it hasn't moved and the size hasn't changed. I get a fill. The only problem with this trade is I don't know when to get out. I'm not sure. I was just going to take the five tick stop loss I had down at 24.75, which is really a preventative measure. What I'm interested in, and I'm saying out loud so I can think about it, is traders who exit on conditions rather than price, because conditions and order flow and how the market is behaving is what determines price action, and not the other way around. So some sort of when I know what I'm doing, some sort of conditional reason to exit is going to be great, and I won't use a stop loss at all, or I'll have some sort of very far off stop loss or measure of risk management. But then again, I know traders who are professionals and they have emergency stops. So I think I'm just going to keep the emergency stop in hindsight, and maybe push it like 10, 20, 30 ticks back. Okay, now price is lifting on heavy size into 27 on buyers. There's no sellers on the ask yet. 1776, then 410 on the bid, 2675 uh, in front of 27. So somebody absorbed, the same person who posted the 1,000 lot, I believe, absorbed 400 on the bid. So they're actively trying to sell size at higher prices, which is good. Then 118 trades. I keep the trade on. Uh, I've seen this type of behavior before. Price rallies back to my entry, and I'm almost sitting there scratching my head because I don't have a reason. I don't have a desired entry point because I can't imagine the trade failing. I've seen it so many times. Price will come up to a large order, then move off of it 4 or 5 ticks, and then come back and fill the order. The market wants to know if it's real and if it's real liquidity. So it plunged one time and they filled and absorbed, which is probably a binary trigger for algorithms to let them know the order is real. And now it's going to come back and rally through 27. And I actually set a take profit 2 ticks behind it because I'm expecting slippage from this large order, which I consider to be its own LE, liquidity event, because everybody knows it's there. So it's going to get hairy when it fills. 26 even order flow normalizes. It's a 36 and 27 on the bid ask. 46, 39. We were below. We're below my entry now at 25.75, 25 on the ask and 7 on the bid, 37, 39. They're hitting lower now, and it looks like I might lose this trade. And then sellers get absorbed heavily. Well, not heavily, but 25.75, 61 on the ask, 73 at 26 even on the bid, 52. So participation ramps up, and then 2 is absorbed on the sell side, 25.50. So the Q stuffed. Uh, Participation's increasing now. Value is shifting outside of the value area and technically a tick lower, which is bad for me in the short term, but good for me contextually wise. But the short term matters the most. 50 hits, 26.25 on the bid. Okay, and price is slowly laddering up now on normative flow, and then the order fills right there. 221 on the bid, 26.75, 1,116.27 even on the bid as well. 98 on the ask, 26.75, and tape jumps. It's its own LE tape rockets, right? And then I noticed that the highest traded price is 27.25, so I move my take profit to 27 even where the large order traded because I realized I had solved or anticipated more slippage than there actually was. And then I sort of get out and rest on my laurels after that trade. Price is up two ticks from 27 to 27.25, 25.50, right? And then I clear my bid ask. Well, what I didn't recognize was that one, it was its own. This was its own liquidity event. It emptied short-term inventory most likely. Order flow normalizes again. And what I think is true, but I'm not sure, is that when it's a real order and it fills, they will fill it. This is the second time I've seen this happen. First time I've seen it happen in person. When a real order fills, price will mean revert, and when a fake order pulls, price will not mean revert. In the short term, it will rally through adverse selection. What that means is price will most likely revert back to the mean or whatever structure of the mean we have, and the closest Schelling point is 25.25. So the moment after I say that, we hit a high of 27.50. Now prices begin to trend lower. 27 even, we're down at 26.50 right now, and the bid ask is normalized. 27 even is 52.40. 75 is 26.17, and 26.50 is 43 and 1. So sellers are piling in lower. Also, the queue appears to be relatively light now. The queue is pulling, not the queue, the bid ask. I mean, the inside prints are pulling now. It appears to be relatively light. We moved two ticks lower aggressively on 16 and 4 on the ask. So, and also it should be noted that I set my take profit two ticks behind the large order, and there was only a tick of slippage, meaning sellers were willing to provide liquidity up there, indicating that they thought price reverting after the large order was filled was a winning trade, which is an indication of price moving lower. And then that's furthered by what appears to be the queue pulling or sellers aggressively pressing lower through this LVN. The large order traded 27, 26.50 down to 25.50 is an LVN, low volume node. So I'm looking for 25.25 for a long, but realistically, now that I know that if there's another large order, I can spot out a mean reversion trade. Ooh, we see a bit of a reprieve in the down trend here. 90 on the ask, 26.50 price upticks by two ticks here. And then liquidity increases uh, on both sides between 26.50 and 26 even as buyers and sellers participate. That just indicates not normative order flow, but value shifting lower via size, which I believe can be traded against. That's what I would trade against. There's a 54 and a 52 at 25.50 and 25.25 on the bid, right in front of the Schelling point. My trigger for this session, there are two things I'm focusing on. One is to hold the trade longer, and the other is to wait for the bid ask to lift, partially with volume. So I don't only trade half the signal. It's not enough for somebody short to be caught offside. Price has to rally against them. There has to be some, or the queue has to be willing to allow price to lift after these people pile in. So we're back in the HVN now, high volume node. We're back in it by 4 ticks. It starts at 25.25 and we're at 24.50. So I think value accepted here. And in my mind, I'm thinking, wow, I really was lucky that I'm waiting for the bid ask here because I could have gotten ran over. 25 even, the auction shifts. There's a 118 on both sides. This is not normative order flow because the size is increased at 25 even. And then buyers begin to step in and the queue begins to reward them, which is bullish given that the inventory has been emptied by that big auction at 25 even, and buyers are stepping in and they're being rewarded. Price is going 2 ticks up. I'm taking a low volume node breakout trade here, probably at 25.25. And then I bid 25.50 on the breakout. A bit late, should have been in at 25.25 after the upticking. And I'm looking for. I had a predetermined stop. I believe it was 24.75. I put a limit order in 24.75 as my stop. I'm looking for a breakout trade here. I had to use a limit order instead of my standard stop loss. If I use my standard stop, they would charge me an uptick in the bid ask spread. 73.25.75 is what's on the bid right now. So buyers are piling in and they're being rewarded. Those are breakout traders at 25.75 who bid 87 on the bid ask on the inside prints. I mean, the sell queue is relatively light, 38, 33, 17, and the bid is 35, 55, 87, 47, 42. Obviously, I'm talking about the inside prints, and there's an order. Well, I wouldn't say there's an order. There's size at 26.75 and 27 even on the queue. It's a 52 lot and a 41. But I'm going with breakout traders here. This isn't a failed absorption breakout, even though buyers were absorbed at 25.75 and 87 trades, and it only moves up a tick. It's not failed because there aren't sellers to trade against. What I mean by a failed iceberg order is there technically are sellers to trade against, but really not a lot. If 87 trades 25.75 on a breakout on the bid on the inside prints, and like 50 piles in on the sell, expecting price to revert and these breakout traders to be absorbed, and price moves higher, the 50 that piled in to trade against them have to puke. That's what I mean by a failed iceberg, and that happens a lot in the ES. And that happens a lot in the ES because of phantom elastic liquidity, meaning liquidity that you can't see, and that is conditional and enters and leaves the market whenever it wants, which makes it more difficult to read. But so I'm up 2-3 ticks right now at 52, and I'm just trading the LVN up to 26.75 most likely. Or if absorption shows up, I'll get out as well. But the auction is still normative here. I get out at 26.75 now because there's more buyer absorption, 82, 84, but it was still a normative heavy volume auction. It just means that price is going to move up with more ease because of more orders were allocated lower in the auction, 26.25 and 82.94 on the ask. So I kind of wish I held the trade there rather than getting out for 3 ticks, but I got kind of a sound rotation on the breakout, and I would feel like an idiot if I let price reverse and stop me out for 2 ticks. What I'm looking for now, though, is for value to hold, which it did. Somebody stuffed the queue by bidding 67 at 26 even. Price jumped 3 ticks. The rally here, the indicator for the move, unidirectional move ending, and also a spoof that was 52. I said there was size, it pulled as well. The indication that the move is ending is a fast pullback or a jump up into illiquidity, but value is still holding. We're up at 27.50 now. So I got out for 3 ticks, and I don't want to say I left meat on the table. I just didn't understand the regime we were in. I believe if I knew that the buyers were in control and we were reacting to something critical, then I would have stuck with it. But I got it for 3 ticks. Now here's another trade. We in a heartbeat, no liquidity event this time, are up at 28.75. And 321 on the bid has been absorbed. 29 even, 929 is on the ask. 82, that's kind of irrelevant. I believe the 82 at 28.75 are our traders using the 929 lot as a backstop. 321 has been absorbed on the bid, I told you again. And price aggressively rallied to this order. People probably think people probably think it's real because the first one was real. I thought it was real, and I was looking for a trade here, and it didn't show up, and I was waiting, and then the order pulled, the 929 lot and the 80 lot who were spoofing in front of him, meaning it was the same guy who had both orders. It wasn't people using it as a backstop. And then the queue subsequently pulls on the spoof by 7 ticks in unidirectional fashion, and that's the trade. And now the order flow is normal, and there's not much to go against. Very strange move for the pre-market. Normally the pre-market is pretty quiet, and then tape ends.